Hey, system trader. Jeff here from EasyLanguage Mastery. And let's talk a little bit about what I like to say is the superpower, which is EasyLanguage. I really believe that EasyLanguage is your superpower and my superpower to being successful as a quantitative trader. So the question is, well, what can you do with EasyLanguage? That's a really good question. So let's look in this a little bit. So EasyLanguage allows you to test ideas. You can take ideas from your head, ideas that you saw online, and convert them into EasyLanguage code. So, for example, what trading style works? Now, as you know, there are two general trading styles: mean reversion or momentum. Let's say we want to focus on those. I know there's others, but let's focus just on these: mean reversion or momentum. So, let's say we want to build a system for the S&P futures. The question we're going to ask and answer is, should we build a mean reversion or a momentum-based strategy? So if you don't know EasyLanguage, how are you going to figure this out? You would have to do research and rely on other people's data. So let's start out with momentum. So let's define that, right? So let's buy at a new 52-week high. Well, that's an example of momentum, right? So price is moving up. Price punches through a 52-week high, and then we go long. So that's buying momentum. Maybe we buy at a new 10-day high. So that's another example of momentum. Or buying when prices cross, or when price crosses above a moving average. Very simple momentum type strategies. Mean reversion looks a little different. We're going to go against the trend, and we're going to locate price extremes and fade those moves. So, okay, the big question, let's build a simple strategy to test how the markets behave. So this is what I would do for the S&P or any market, is build a little example strategy, a mean reversion strategy, and a momentum strategy to see which way or which strategy works best. So momentum, we're going to go real simple here. We're going to take 3 consecutive higher closes. So that's going to look something like this. These are our bars, right? So we have 3 consecutive higher closes. We're going to call that our entry signal for momentum. And the easy code, or the EasyLanguage code, looks something like this. Very simple, very basic. It doesn't take a lot. If you don't understand this, that's not a problem. It's really not the point here that you know the EasyLanguage. I just want to demonstrate that to do something like this, it doesn't take a lot of coding. So then we have our workspace set up. Let's put this on the daily chart of the S&P futures, and we're going to go between the dates of 2000 to 2018. No commissions or slippage for this example, and our max bars back are going to be 200. So what do you think is going to work better? Are we going to have a mean reversion that works better, or are we going to have a momentum that works better? Well, let's buy that momentum, and that's what that looks like. Not so great, right? You could see that most of the equity curve spends its time below the zero line. Only here at the last 100 trades or so are we starting to see profit. So buying momentum looks rather weak. So let's invert the EasyLanguage code. All right, let's invert it. So what I did here is I took the setup, and instead of buying 3 consecutive higher closes, we're going to look for 3 consecutive lower closes. All right, a little scary, right? So in other words, price is falling, and we're going to buy into that falling price. So this is our buying mean reversion. And look at that equity curve. Completely different, right? What does this tell us? This tells us that at least on a short-term basis, 1 to 3 days perhaps, that the S&P market on the daily bar is a mean reverting strategy. And that's what we want to focus on. So if we're going to build a strategy for the S&P within that time frame, we're going to probably want to focus on mean reversion. You see how quick that was, to develop something like that? And what insight that provided. Very valuable information, and you can do all kinds of tests like this on all different markets and different time frames. So let's take a look at that again. Look at buy momentum versus buy mean reversion. It's a night and day difference. So the conclusion, if you want to build a short-term trading strategy for the S&P, you probably should focus on mean reversion strategies. All right, let's look at another example. And does this indicator work? Let's take the example of John Eller's Algorithmic RSI. I hope I'm pronouncing that correctly, John. Sorry if I'm not. So the John Eller's Algorithmic RSI is, well, here's a picture of it. This came out of a website. And you can see what we have is Amazon is the stock here on the 60-minute chart. And the indicator is below on the lower pane. And you can see it has this nice call outs, go short here, go long here, go short here. That looks great, but is it going to work for the markets that I trade? What if I trade different markets and different time frames? Is this indicator really worth anything? Well, when you have EasyLanguage under your belt, you know how to use it, that's your superpower, and you can do experiments on the market to see what works and what doesn't work. So that's the big question here. Let's build a simple strategy to test this indicator. We're going to test the Eller's Algorithmic RSI, and we're going to buy when the Algorithmic RSI is less than 0.1, and we're going to simply sell when it's 0.9. This is the very basic of the strategy, or I should say this is the very basics of that indicator. And let's go apply this to a chart. So I just wanted to show you what this looks like. So on the upper graph, I have ES, a market that I prefer to trade instead of like Amazon or Apple. So it's the ES futures market, and we can see down here is the Algorithmic RSI, and you can see right there, that's when it fell below our value, our buy value of, I think it was 0.1. So that's when we go long, and then we sell short. And you can see that correlates with the trade above. And then we have another one there and another one there, and you can see how that correlates with the buy and sell signals. So it looks pretty good. That's what we want to do, and this is what the EasyLanguage code looks like. Again, not important if you don't understand this. It's only a few lines of code, not too bad. It's pretty easy to do once you understand the basics of EasyLanguage. So let's apply this to the gold futures, right? What do you think? How's this going to look? Not bad. This it looks to me like this indicator produces some viable results. That looks pretty decent. What about the Euro futures? Works well there too. I'm surprised. I didn't think this indicator would work so well. Did you? What about NASDAQ? Wow. Look at this. Now, keep in mind, again, we didn't have stops in there. We don't have other factors in there. This is just a very crude test to see how this works in a very simple manner. But what this indicates is this possibly could be very valuable. It's possible to build a viable trading system from this indicator. And again, you see how easy it was to use EasyLanguage to do that? Let's move on to another example. Price patterns, right? There's so many different price patterns out there. Well, does it work for your market? Does it work for your time frame? With EasyLanguage, you can determine that. So I found this website. It had 10 price action bar patterns you must know, and I just picked one called key reversal bar. So a key reversal bar, what does that look like? Well, we've got some bars here going down, boom. There's our key reversal. And the reason is because we have the lowest low of the past 3 bars, and it's the high is greater than the high of yesterday. So when that happens, we're going to call that our key reversal bar, and that's when we're going to go long. It's a very simple pattern, and we want to test to see how effective it is. Knowing EasyLanguage means you never have to wonder if a price pattern will work or not. You can figure it out. So let's do that by putting it to the test. So we're going to simplify the exit by just having a 5-day exit. We're just going to buy and sell 5 days later. And we want to test the behavior of the market after this event. See, what we're doing is after this key reversal bar happens, what does price tend to do 5 days later? 5 days after this reversal happens, is the market up? Is it down? or does it tend to just go sideways? Really important information, right? And EasyLanguage makes it so simple to do. So let's go take a look at this. Yeah, this is basically what I said before. What happens to price after a 5-day reversal? Does price close higher after 5 days, or does it close lower? So once again, here is the EasyLanguage. It's a little bit more complicated, but again, not too much. You can see here, this is our exit being printed out here. That's what the code looks like. All right, let's get to the good stuff. S&P futures, what do you think? Ooh, not so good, right? So buying this pattern is not so hot. Everything is negative. So let's change this around, right? It's funny because you have price going down and then you have this strong bar, the key reversal. And for the S&P, what that means is more weakness. Doesn't seem to make sense, right? You would expect a key reversal, a strong reversal bar like that to mean strength. Not necessarily, particularly when you're holding for 5 days. See how important this is to understand and test? So let's actually change the reversal bar. Let's change it to the high is greater than the high of yesterday to less than yesterday. Let's shrink that down like that. What do we have here? More weakness. Another lower low and a close that is lower than the high of yesterday. So it looks weaker. We have 1, 2, 3 bars of lower lows, and that big reversal bar is no longer there. Let's look for this pattern. It's a weaker pattern and apply it. Guess what? Again, the S&P demonstrates that buying into weakness is a key component. You will be rewarded if you buy into weakness. Again, look how important this is. This is excellent. So this price pattern does not work on a daily chart of the S&P futures. However, a slight modification may make it useful. And of course, you can apply this to all the markets and all different time frames, the time frames and markets that you enjoy trading. Let's look at another one. Does this strategy work? All right, how many strategies have you seen out there on websites, YouTube channels, in magazines? And does it really work? Well, you have to take other people's word for it, but not if you know EasyLanguage. You can actually code it up and test it yourself. So I found this one a long time ago. This goes back more than 10 years ago, and one is the first coding, or I should say one of the first trading systems I coded up. And it was called the First Strike Trading System, and they had this beautiful looking equity curve. Look at that. That looks awesome. So of course, in the old days, I would have just started trading this. I would have read the rules and started trading it. But not now. I would code it up and test it. The rules are simple. Simultaneously place a buy stop 50 points above Monday's open and a sell stop 50 points below the Monday's open. So on Monday at the open, you just place a stop to go long 50 points above that open and then one to go short. So we don't know if we're going to go long or short. We're just going to let the market action take us into the action. And when one order is filled, we cancel the other order and put our stop in at 60 points stop loss. So it's very simple. One trade, and the market's going to take us long or short. The second rule is if we don't get stopped out, we exit 5 days later on Friday. So it's one trade a week, and you're either going to get stopped out or you're going to be closing the trade out on Friday. So very simple rules. We can code this up in EasyLanguage like we've done before. Again, we can see here, there's not going to be a lot of code. We're going to compute our upper and lower bands. We're going to put our sell short. We're going to put our buy. And you can see we can fit this all on one page. So the big question, of course, is, will it work? Well, here's the euro. Not so good. Now, this was from 2008 to 2018. I haven't looked at it lately, but this does not bring confidence. So I'm glad I did this before putting money on the line. And this is what you can be doing too, these types of tests. So the conclusion here, of course, I was able to test the strategy before putting money on the line, and I determined you can't trade it as is. So the summary here is Knowing easy language allows me to experiment with what works and what doesn't work. Before I put money on the line, I create objective evidence. So that's it. That's the game changer right here. Most people are just guessing. Are you guessing with your buys and sells, or do you have objective evidence to say that it's going to likely work or not? So knowing easy language, there's no more guesswork. Can you see how powerful this is? Evidence-based trading. That's what this is all about. That's what we're doing when we learn to program a computer to trade for us. That's quantified trading. That's what this is. So you perform experiments to see what works and what does not work. I spend the vast bulk of my time as a mad scientist on the markets determining what works and what doesn't by doing these experiments. And it's a lot of fun, and you collect so much valuable data. Knowing easy language is an incredibly powerful skill to have. I hope you can see that through this short demonstration. It really is your trading superpower, and I hope I was able to convey that. So, how do you go about learning easy language? Let's spend a couple minutes here talking about that. Well, there's no simple solution. You're going to have to put effort and time into this skill. It's like any other skill. You're going to have to put time and effort into it, but it's so worth it. So what I would do is download the TradeStation development environment, download TradeStation's essential guide, and read some books on it, and go through tutorials that you find online. I know that's very general, but get this guide as a starting point. TradeStation makes that available. Learn this guide too. TradeStation makes that available. This talks about a lot of the different functions in TradeStation. And of course, there are some free tutorials on TradeStation's website, on their YouTube channel. This one is called Introduction to Easy Language. Go ahead and Google that, and you'll find a 1.5-hour video on that. Easy Language also, I should say Easy Language, TradeStation also has a lot of forums. You can learn a lot there as well. They have some home study courses too. This one looks pretty decent, and this one looks decent, but I wouldn't focus on this one if you're new. That's the object-oriented. Don't focus on that. Focus on those other ones. So these are all some ideas on what you can do. And also, Markplex has some great tutorials on easy language. Google that, and you'll find some great information. And of course, on my website, you'll find a quick start guide under the Learn tab, and that's a great tutorial for absolute beginners as well. So, you have to get your hands dirty and just jump in and start building indicators and other graphical elements, build simple strategies and on different markets and timeframes, watch tutorials and do the work. Every couple of days, you should be writing code. Now, I know I covered a lot here, but I'll put all this information, these links, into a resource guide. You'll find the link below this video on this page. And with that, you should be able to run and start learning easy language all on your own. That's how I taught myself the same thing. And you know what? I just want to remind you, this isn't theory. This is exactly what I did to turn my trading around. I hunkered down and learned to code. And once I was able to code, that really changed everything. I could really crack the codes on the markets and see what works and what doesn't work and test ideas. So again, I would highly encourage you to pursue easy language. Now, again, you can learn this on your own like I did. You certainly can do it. I did it. You can do it too, I'm totally sure. But of course, it's going to take a lot of time and a lot of trial and error. Now, there is a faster way to learn easy language, and of course, you probably know that. The better way, of course, is to have me teach it to you. And I've developed an exclusive training program to teach you easy language. And during this class, I didn't want it boring, so I'm going to only show you what you really need to know. And what that is learning how to code strategies. So we spend a good amount of time just building different types of strategies. And I think that keeps it incredibly interesting, incredibly relevant, and a lot of fun. Of course, I'm talking about my System Development Master Class. And, this is broken up into 3 different editions. The Coder Edition, where you learn easy language. That's what you want to do first. And then the Builder Edition, where you learn to build strategies. And then there's the full experience, which really is just both of them together. You can buy both editions without having to pay the premium if you bought them separately. So you save yourself a little money by getting the full experience. So learning EasyLanguage is really the first step. That's why I have this as the first edition, the Coder Edition. It's number one on my list if you want to become a profitable trader, is to learn the skill. Learning EasyLanguage is a fundamental skill to becoming a quantified trader that's successful. So if you're interested in learning EasyLanguage from me, the Coder Edition is what you're going to be interested in. In another video, I'll go into more detail about the Coder Edition, all that you're going to learn and how it's taught. You're going to absolutely love it because it's a very interactive experience, and I think you're going to be very surprised at the level of attention and detail in the class. Talk to you later.